Glad to have you. Okay, so fantastic. So tonight we have a special session. I think will give you guys very practical, helpful guidance, kind of anywhere you are along your mortgage journey, whether you're looking to understand about getting a mortgage for the first time, whether you have a mortgage and want to refinance, or whether you want to take out a loan. I put this together based on feedback from you guys about what would be the most helpful in sort of this space. And because, as you know, mortgages are one of the biggest financial levers in your life, not kind of being aware of what's going on and dialing this in can have a huge impact on you. Okay, so we have a very special guest, Joel. He made Aliyah in 2008 from Germany. Worked basically in high tech and automotive for several years, and then had an experience that maybe some of you can relate to. Took out his first mortgage, started paying it off year after year after year. Went back, looked at the principal, and it looked like it didn't change much. And all of a sudden he's like, what's sort of going on? And his loan was mainly at that time paying off the principal. So he started to sort of dive into it, got his credential, and has been helping people sort of ever since, especially people from abroad, where, I'm from California. The system is very different than it is here. Um, he saved, I think, 250,000 shekels on his mortgage, brought down the monthly payments, stuff like that. So I guess without further ado, I'm gonna, Joel, let you take it away and share with us some wisdom here tonight. Welcome.
Wonderful. Thank you, Malcolm. Yes, okay. The introduction was already pretty good, so I don't need to continue. So, as Malcolm said, I'm a former high-tech guy, and yeah, I came to mortgages because of my own mortgage, because I did not understand what happened there. And as a good Yeke, it was not good enough for me to read some articles in the internet, so I went all in and signed up for a mortgage course in a finance academy and became my first customer. So I didn't want to become an advisor there because I had a good position in high tech and uh, yeah, but it's the famous snowball effect. So I was my first customer, then friends, colleagues, and it became more and more. And about a year and a half or 2 years ago, I decided to switch and to become a mortgage consultant because I really feel that you guys and me also, we Chutznikim, that we need more help. Yeah, because we know a different system, and we believe the system that we know is is a system that is right all over the world, more or less. Yeah, but here it is very different. And in my session, I will now, I guess, open my deck. I've prepared the deck, and we will go over it. And I will now try uh, to share my screen. So now I'm not so good with Zoom.
See the little arrow at the bottom that says share?
I have it now.
All right.
Yes, here it is. Laptop screen. Yeah, it's here. Now you can see something, and I think,
Yeah.
but you cannot see me anymore, right?
Yeah, we can see you as
I,
well.
Okay.
I see a wallpaper though. I don't, do people see Joel's deck or the wallpaper of the mountain?
Here. I think we have it now. Is it
You see
possible?
some beautiful the mountains, the
No,
Alps or
still seeing the
something.
wallpaper.
Wallpaper. Okay. Now I'm going back and share in a different way. Oh no. So we are already screwing up in the first second.
Just check which screen you're sharing.
Yes, right. So use system desktop capturing window. Ah, no. Here. This is better. Okay. Yes. Here, guys. Now you see me and the deck
We see you and the background.
and the background. Man.
What we could do, if it continues to be an issue, is that if you send me a link, I can do it. But if you try again, maybe let me see what it. Oh, hold on, sorry.
I'm sharing the.
If you do share screen, you can
Yeah,
choose
yeah.
either entire screen, window, or tab. So
Yeah.
if you choose the correct window, it should let you share what
Yeah,
you
do you know
want to
what I'm
share.
doing? I'm just switching off the second screen And give me a second now.
No problem.
Now I am.
Even just to sort of take a little bit of a poll for people while Joel's doing that, how many people here are interested in understanding mortgages for the first time versus refinancing versus taking a loan? If you want to even share in the okay, we are in business. But even to get a sense, if you want to put in the chat really quickly, take out a loan, refinance, or loan, then it can also help Joel even just how he understands how to structure the time about these parts. So we start to see, okay, in the chat here, we've got from Yale, first time, Chaim, first time, reverse mortgage, from Judy, first mortgage, sorry, reverse mortgage, first, refinance or loan, first time, already have a mortgage, refinance or loans. Okay, it looks like a pretty good mix.
Yeah, so let's talk
Great,
about everything.
fair enough.
I'm prepared. Um, okay, but you can still hear me, right? Because I switched off everything now.
Yeah.
Yeah,
Okay, perfect. Nice. So
we
apologies.
can see you twice on the video and on the screen, but it's fine.
Okay, so I think we have to
It's
we have
okay.
to
It's
accept it.
do Joel's works.
It will take too much time now to fix also that. So, okay, get it right in Israel or how to navigate the mortgage jungle. This is how I love to express it actually. And by the way, as Malcolm introduced me, I made Aliyah um, in 2018 from Hamburg in Germany. My English is quite okay, but I'm still having this German accent, and you have to live with it, I guess. So, I feel yeah. So I used to live in Jerusalem and in other cities, and was always very, very connected to the Anglo circles. So I believe I can manage in English with a strong German accent. So, as a good German guy, I had a career in automotive technology in Jerusalem. I was at Mobileye at smaller startups, everything about autonomous driving, driver assistance systems, and so on. Um, as we said, own mortgage and so on. We don't need to talk about it again. What I want to talk about now is first about a mortgage roadmap. Yeah, the roadmap is actually matching for all kind of purposes, for a new mortgage, for refinancing, and so on. The roadmap is always the same, plus minus. Yeah, I will explain when we are seeing the deck. Then I want to talk about differences. When I'm talking about differences, then I cannot talk about exact differences from country to country, but globally, differences abroad and Israel mortgage system. And there I'm already explaining a lot that is very important for you not to make mistakes. Yeah, when you start with the mortgage system, because things are different. Not knowing the differences leads to problems, actually. I would talk about refinancing. I would talk about loan consolidation. Loan consolidation is actually remortgaging the house for something else. And then there's something that is called reverse mortgage. What that is, of course, I will talk about it a little bit later. Now, this is the roadmap, mortgage roadmap, a roadmap to a mortgage. Yeah, so this is actually a deck that I also show to my customers. So therefore, we have here the intro, but we don't need to talk about intro now. So if we want to take out a mortgage here in Israel, we have to be aware what we can afford. Yeah, what can we afford? How much of a mortgage can we get from a bank? And what could be the price for an apartment that I want to buy? All this we have to understand before we turn to the bank. Yeah, if we want to make it professionally. Yeah, so the first step is understanding what we can afford, and then we want to go to a bank. Now I'm talking as an advisor, doing it hand in hand with me, but also if you want to do it alone. Yeah, you have to go to a bank, and you should turn to at least two banks. Yeah, of course. How can you do negotiation best in turning to more than one bank? Yeah, to send one offer to the not so good offering bank and do the ping pong game there, right? So application, mortgage application means we need to supply a lot of documentation. Here in Israel, we have to prove everything. Yeah, we have to prove income. We cannot say, yeah, I have a good income. Yeah, it's not enough. Yeah, we have to prove it. 3 months pay slips, or if we are self-employed, then it's getting more complicated. Then the banks want to look back actually 3 years. Yeah, so it's getting more complicated when we are self-employed. I have my tricks, of course. I know when I can ask for exceptions. Yeah. And if you're self-employed and you're not having 3 years in income, self-employed income, then I can ask for an exception. And usually the banks are accepting this. Yeah. We have also credit scoring here in Israel. The biggest sin, actually, the sin of the golden calf here in Israel is not paying back the mortgage. It is also not so good not to pay at all. So that Horat Kerva, so that incoming payments are not um, uh, yeah, cashed in, let's say. But mortgages. Mortgage, if you're not paying the
When you
mortgage.
say not paying back the mortgage, do you mean previous mortgages that you've gotten?
So here I'm talking about refinancing, right? Or if I want to take sell my house and buy a new apartment, so I have maybe a history, and once I did not pay the mortgage for 1 month, then I have a big problem. Yeah, this is something we have to prevent. Yeah, the mortgage payments is very important. Um, Yes, a lot of documentation we need. Then we have to fill out an application for a mortgage. This is yeah, a lot of work. We need to fill out paperwork, everything in Hebrew, and therefore it is very helpful also that an advisor can do this. Yeah, because some people have a strong Hebrew, others have a weak Hebrew. Yeah, and dealing with the banks in Hebrew is a thing. Yeah. So
Joel, just
this,
one question on the initial point you made about how much loan you can get. Basically, it's usually a multiple of your income.
I will explain it.
Ah,
Yes,
okay,
I
okay.
come to it in a
Yeah.
moment. Yeah. Okay. So then let's assume we handed in all the paperwork. Then we get an approval, a first approval. Yeah. The approval says the bank is giving you a mortgage now or in the future if your financial situation stays the same. Yeah. No change in credit score, no change in income. Yeah. Then you will get a mortgage. And my advice is if you want to buy an apartment maybe in 10 months, to take out an approval already today. Then you know you get a mortgage and you're on the safe side. Yeah. After getting the approval, it's not too late to change the mortgage mix. What does it mean, mortgage mix here in Israel? Let me also explain this a little bit later. I want to give a rough overview here, and then I'm explaining all this. Yeah. Um, but maybe it's also interesting. So let me explain it now. So here in Israel, we have a huge mortgage soup that we can cook. Yeah, this is what I say always. It's not like in the States where we have a fixed route mortgage and an arm mortgage, an adjustable route mortgage. And other than that, nothing. I can choose between these two. Here in Israel, we can choose actually between 10, 15 different routes for one mortgage. Yeah. A mixture between fixed route, adjustable routes that are linked to foreign currency, and so on. So it is very, very confusing. Yeah. And you can wait with defining your mortgage mix. You can do it after the approval, but you have to do it, of course, before you sign on the mortgage when you fix everything. Yeah. Good. We're continuing collecting documentation. If we want to buy a second-hand apartment, not an apartment from a construction company, then the bank requires us to send an appraiser to the property because there's always a difference between market value and contract value. Yeah. So for the bank, the lower of these two is the more important part. Yeah. If we want to get a mortgage, then the appraiser actually has a strong word in all these definitions. Um, Negotiation, I talked about already. Signature. In the end, we want to get the mortgage and we have to sign on paperwork, on a lot of paperwork. When I came to Israel and opened a bank account and I had to sign on 30 pages or whatever, it was new to me. In Germany, you sign once and that's it. Yeah. But here also on the mortgage paper, you have to sign on it, and usually you have to go to the branch. The two biggest banks, Leumi and Mizrahi Tfachot, don't require you to go to the branch. You can sign online on Zoom. It's very convenient. You don't need to take a day off just to sign on the mortgage. Um, yeah, and then the money transfer, and by the way, the money transfer for an apartment purchase is not the money is not transferred on your account. It will be directly transferred to the seller. Yeah, so you don't see the money actually. You just pay it back. Okay, this is rough. The mortgage roadmap, that's how it is working. Collecting documents, applying for a mortgage, uh, getting an approval, negotiation, um, uh, getting more documents, and that's actually true for a new mortgage, recycling, and all these mortgage um, products that I will talk about now or soon. Yeah. Okay, now let's have a look. Requirements. What do we need? Or which key players do we have in the game for getting a mortgage? Yeah, of course, everyone knows we need a lawyer. A lawyer, and here it is very important. Don't take your best friend who's a family lawyer for a property purchase, because it is not just the contract that he has to review. He also has to do yeah, he has to be connected with his computer to the land registry or authority and perform changes in the property registry. Yeah, so he has to be from the field. How much does it cost? It depends. It's the best answer here in Israel. It depends. It's about 0.5% of the property value that you pay to the lawyer, but it can be more, it can be less. Yeah. Um, okay, real estate lawyer is the main uh, point here. You have to have it. An appraiser, if you buy a second-hand property, as I said, how much do you pay for it? Between 500 and 1,500 shekels, let's say, depends on the property value again. If you're self-employed, we need to prove also your income, and therefore we need an accountant. We need tax reports, and if we don't have a tax report, for example, now for 25, we don't have a tax report, we need an accountant report. Also, if we have foreign income, for Americans, we need the 1040s. Yeah, we need to prove everything. 1040 if you're employed, or if you're self-employed, or if we need to prove everything. Now, next step, differences. Yeah, and in differences, when I'm talking now about differences, it is really a tension mark. Yeah, and please be aware that here are things different, and you can uh, into uh, trap into traps. Yeah, okay, let's talk about differences. We don't have here in Israel a mortgage contingency clause. This is the biggest thing that everyone needs to know, and most of us don't know. What does it mean, mortgage contingency clause in the States, for example? It is common that you go to a seller, you buy a property, you sign on the purchase contract. With the contract, you go to the bank and say, hey, I bought a property, I want a mortgage. Good case, banker says, okay, no problem. Not so good case, banker says, no, we don't give you a mortgage. You don't have the income, whatever. You have credit score. Then you go back to the seller and say, mortgage contingency clause. I want to get out of the contract because I don't get a mortgage. The seller says, okay, that's it. Here in Israel, we don't have it. We don't have it, okay? We sign on a purchase contract. We have to stick to the plan, or we have to pay penalties, and they are high. So therefore, here in Israel, you have to secure a mortgage before you sign on a purchase contract. This is most important, okay? And therefore, I'm coming back to what I said in the beginning, the approval. Get an approval early. Get an approval for the maximum mortgage that you can get, and later define the mortgage, the sum of the mortgage, uh, as you need it. Yeah, and you can extend the approval as long as you want.
Joel, just one point on the pre-approval for the mortgage. Usually
Yes.
that process is a fairly quick and simple one. Am I correct in that? Where, especially if you're working with your current bank and you're employed by a company, it's not a very long, exhaustive process. It's
Yes. Yes, that's correct. It is not an exhausting process. The thing is, the real approval, you have to hand in already your documents. Yeah, you get also an approval without documents, but then the bank doesn't have to stand into this approval. You have to supply already documents, and you have to um, extend the approval. You shouldn't forget to call the banker every 1.5 months or 2 months to extend the approval. Yes, but it is a fairly easy process. Yes. For this, you don't necessarily need a mortgage consultant. You can do it by yourself. But if you plan to take a consultant for the mortgage mix, for the negotiation, and so on, then let him also do this job because you pay him already. Yeah. Okay. Now, I mentioned it already. It is not just a fixed rate mortgage or an mortgage. You can design your mortgage um, uh, based on your present needs and based on your future needs. What does it mean, future needs? Maybe you know that in 8, 10 years, there's coming money in. Maybe wherever it may come from, yeah? And you want to use the money to pay back already a part of the mortgage. Then you want to be able to pay back without paying penalties, yeah? And what penalties mean, I will talk you about in a moment. So here we go. The mortgage mix has to include a third of the routes has to be a fixed route. This might sound logic and also good for me because I want to know what I'm paying for over the whole term. I don't want fluctuation. I want to have it very the repayment over the years. I want to have it pretty stable. This is a good thinking. But today we are in very expensive times. So if I'm locking in fixed routes and maybe in 1, 2 years the interest rates are going down, then I have a fixed route mortgage, right? So it is good to have fixed routes, but Bank of Israel says it has to be a third, and in my opinion today it shouldn't be more than a third. You can stabilize your mortgage with other routes, for example, with ARM routes, adjustable mortgage routes. Yeah, I'm using the words that we maybe know from abroad, so that we agree with the bank on an interest rate for a fixed period of time, like 5 years or 2.5 years. And after 2.5 or 5 years, we can refinance this route without penalties. But until then, we have everything very stable. So our mortgage mix has to have a fixed rate, a fixed route, and the amount is a third. Now we are talking about prepayment penalties. You already mentioned penalties. What does it mean? Penalties. In mortgages, we are not paying penalties. Here in Israel, we do. Okay. Also, very important, we do. We have to pay penalties. If we want to prepay our mortgage, we want to throw money in because we have money now. Then there are routes where we have to pay prepayment penalties. Yes, crazy. And which route is it? It's the fixed route where Bank of Israel tells us that we have to have it in our mortgage mix. Yeah. So very, very important. Design your mortgage so that that you always can refinance the mortgage without paying penalties, or at least not with a lot of penalties. The fixed routes, in really bad cases, the penalties can be tens of thousands or even more. Okay? A lot. Okay. No penalties anymore. Okay? We do it different, complicated now. It just, I just wrote it complicated because it is called like that, but it is easy to understand. Loan,
Are you saying that as soon as you get a mortgage, you should purposely refinance it immediately so that you can avoid penalties in the future?
so we have a wording problem here. Refinance. Let me please, it is Leah, right?
Yes.
Leah, let me explain refinancing in a moment when I'm talking about refinancing.
Okay.
Yeah, okay?
Yep.
Okay, so loan to value
Joel,
restrict. Yeah,
just to make sure that we all follow, because I do think this is important, particularly because this project process is generally done in Hebrew. When you're talking about the mix, this is
yeah.
what is generally referred to as tamhil.
Yes, correct. Mm-hmm.
Okay.
Yes.
I think it may be of value, at least in far as the technical terms that the bank is going to use,
Mm-hmm.
if we could, tie them to the Hebrew terms that
Yeah,
are
okay.
generally used here. I think that
Mm-hmm.
would be very beneficial. Thank
Sure,
you.
I will. Yes.
Sorry,
Tamir,
are there are there any prepayment penalties on selling the property before the mortgage is up?
if you have a fixed route, yes.
So if you've got a 20-year mortgage and you sell it after 10 years, do you
Yeah.
have a penalty on the remaining 10 years?
So it is complicated to calculate the penalties. The penalties in the fixed route are calculated on the delta between the interest rate that you signed on, yeah, and the market interest rate in the moment you want to repay this route. And this delta is calculated on the term that is left until you paid off this route. Okay? So if you sign on a fixed route for 30 years and after 2 years you want to repay this, then there are 28 years open. And if the delta between signed and market interest rate is big, yeah, then you pay a lot of money. Okay? So we can calculate it. It is very complicated. Usually, if the bank is calculating it, then the number is very accurate. If non-banks are calculating it, is like very, yeah, it's not 100%, but it's about 90% accurate. Yeah, but it's helping. It's helping to understand.
Even just to go conceptually with that, the bank is understanding, hey, Malcolm took out a mortgage and he's now on the hook for this amount that he's going to pay off. If I sell and the interest rate is the exact same as when I signed, then there's no penalty. But it's
And
then if it's how much it's changed, and again, if it's changed only a quarter of a percent, it's not that much. But right now the interest rates are high. If it drops 3%, that those are the factors that get calculated along with the length to determine how big the penalty is.
today, if we are repaying a fixed route that we took out 5 years ago, we are not paying penalties because today the market value, the market interest rate is higher than the one that we signed on. Yeah. And always if it is higher, then the bank actually cannot sell our conditions to someone else. Yeah. So therefore we can get out without penalties. If it is the other way around, that we are now in cheaper times than when I signed off, then we are paying penalties. Okay, good. Let's talk about loan to value restrictions. Yeah, not so complicated as it looks like. Yeah, how much mortgage can we get? For the first apartment, we can get up to 75% of the property value. Yeah, in other countries, it is 80%, 90%, 95%. Here it is 75% for the first mortgage, for the first apartment. If I have one apartment and I want to buy a second one for investment, then I get for the second apartment just 50%. Okay? These numbers are very important if you want to calculate how much mortgage you can get. And now I'm coming back to what I said before, the appraiser. If I say 75% maximum mortgage and 25% is your down payment, what is 100%? Okay. Um, you will say, yeah, it's the contract value. It's the money I pay to the seller. I say not necessarily, because we have to send also the appraiser. Appraised value, where are my hands? Appraised value, contract value, the lower of both is the 100%. Therefore, if we are tight with money and we need 75%, the maximum mortgage, and the appraiser is appraising a lower amount, then we have to finance the delta actually between the money that we need and the mortgage that we get. So we have to ask your parents or whatever, right? Not so convenient. So maximum mortgage 75%. If you're a foreign resident, you don't have an Israeli ID, but you want to have a mortgage, then you get a mortgage, by the way. You don't need an Israeli ID for this, but you just get 50% of a mortgage. And the whole application and so on is more complicated, but it's possible. Now, the next one also sounds great. Debt to income ratio. What does that mean? So this is also something that I think it's an only in Israel thing, right? How much mortgage repayment each month can you afford? Yeah, Bank of Israel says not whatever you want. Bank of Israel says the maximum mortgage repayment per month cannot be more than 40% of your net available income. Net available income, what is that? Net income is the money that reaches your bank account, yeah, after taxes. Net available income, it is the net income, and they're they're looking at loans. If you have loans that are longer than a year and a half, then you have to deduct them of your net income, and this number is your net available income. 40% of that, and here's written 50 is a mistake. 40% of that is what you can pay back for a mortgage. 40% is a high number. The banks don't agree to 40%. They want to see 34%, something between 33 and 35%. Okay? So this is the second hurdle. Not just the down payment. It's not just that you have to bring down payment. You also have to show a good income to get a mortgage. Some people say, hey, I have $5 million on my investment account and I don't have a high income. I actually don't have income at all. I want a mortgage. I say, difficult. They say, why? I have enough savings. Banks want to see income.
Even just to give one example, Joel, of that with the math. So let's say that I bring home 30,000 shekels enters my bank account at the end of each month. The
Yeah.
Bank of Israel will essentially say, okay, a third of that is what I'll give you in a mortgage. So you can have a mortgage payment that's up to 10,000 shekels
Yeah.
as a way to start to understand, if you're like, how much can I even afford? The most basic way to think about that is, okay, how much do I bring home? Let's look at a third of that. That's how much they'll give me in a loan. And then you can also tie it to say, well, to get a million shekel loan, again, I'm not going to say the exact numbers, maybe it costs about 5,000 shekels in mortgage per month. And you can start to say, oh, I can get a loan of this amount as a way to back it out as well.
This is exactly what I do, and there I feel that I'm different than other consultants. I do these calculations without payment. Yeah. So this is my initial meeting on Zoom for an hour where we do all these calculations, where we calculate 33%, 40%, and so on, because there are banks that agree to 40%. We don't have a possibility to do negotiations because it's just one bank, but if we need it, then we go for it. Yeah. So we need to calculate it, and we have to understand also if there are loans and so on. Yeah, I'm super happy to do so. Yeah. Okay, the next one.
So
Yes.
I don't know if I think I'm a bit confused about the third of the mortgage as a fixed rate.
Okay.
You can choose the rest, but so then why do you have to initially design your loan in to be able to refinance it if you only have a third that's a fixed rate that you have to pay back every month?
Let us wait a second until I'm talking about refinancing. Yeah. But maybe a small answer. If they say a third has to be fixed, you can also have 100% fixed, but you cannot have less than a third. Yeah. You can have 20 routes or one route. Doesn't matter. But the one route needs to be fixed then. Okay. Okay, another important point is that we need insurances. Property insurance, not a big problem, but life insurance. Yeah, we need to have a special life insurance just for the mortgage. In case that one of the borrowers passes away, chas v'shalom, that the mortgage is paid off. And the, let's say, survivor gets the mortgage-free apartment. Yeah, the mortgage life insurance is cheaper than a regular life insurance, but we have to understand: do we have maybe health issues? Is there a problem getting a life insurance? Yes, no. If there's a problem, there are ways to to deal with it. It's getting complicated. It's not very easy, but it's possible. Yeah. Life insurance. Check early if you can get a life insurance. Age limitation. Can I get a mortgage when I'm 90? No, I'm sorry. You have to pay off the mortgage until you're 80 or 85. I can get exceptions until 85. Yeah. So if you're 60, then you can get a mortgage for 20 years. Yeah. If you're 50, it's for 30 years. No interest deduction. This is a bit, we're going into tax areas now. Don't want to get too deep into it, but we don't have tax deduction here. And now we are talking about refinancing. Okay, so now, and we just have 5 more minutes, so let me be now very efficient and fast. Refinancing here in Israel does not mean that we can take out more equity out of our apartment that has now a higher value. Refinancing in Israel means just redesigning our mortgage mix, yeah, to gain from different interest rates or to refurbish a not very good mortgage mix. This is refinancing here, yeah. So if I took out a mortgage 10 years ago and I go to a mortgage advisor, he will review, I will review, and I will look for interest rates that are too high or for routes that make the whole mortgage mix very expensive. Then we can refinance this mortgage. Most of the cases, the fixed rate I will not touch, except it is too expensive. But we can refinance also the other parts. We don't need to redesign the whole mortgage. If the whole mortgage is too expensive, we also can leave the bank and go to other banks, yeah, and get back um, better interest rates conditions there. But if I have one route that is really good and I want to refinance the other routes, then I have to stay at the bank because I cannot take very good conditions from one bank to the other. The new bank will not agree to this.
This
Okay.
is what's called a mixzur mashkanta.
This is the Michsur Mashkanta, yes. Okay. Loan consolidation, Ichud halvaot. Okay. I forgot using the Hebrew words. Ichud halvaot. So here we have an apartment and we have too many loans. Maybe we have a mortgage and we have too many loans and everything became too much and I cannot breathe. I have to take another loan to pay off the monthly payments of existing loans. I am in a spiral, in a spiral of not having my finances. Um, yeah, I'm not in control of my finances. What can I do? I can do loan consolidation. I can actually put another lien on my house and move all the loans into my mortgage. What is the pro? What is the con of this? The pro is I can spread actually the term up to 30 years. Loans I get up to 10 years. Mortgages up to 30 years. So the monthly repayment will be lower because I spread the term. I'm stretching the term. The con is if I'm stretching the term, then the overall cost will be higher. I will pay over the whole term more in interest rates. But what can I do? If I can reduce my monthly expenses, I can breathe again in the end of the month. And if I move the loans into my mortgage, then the interest rates will go down because the mortgage, because because of the mortgage system where we put a lien on the house, we have safety for the bank that the bank gets the money back, or in bad cases the house. Um, the interest rates are lower. Okay. How much can I get? 50% of the market value of the apartment. Let's assume the market value is 4 million shekels, 50% is 2 million. Let's assume I have another million shekels mortgage on this house. Then I have another million that I can use for loan consolidation for Ichut Halvot. And the last product is reverse mortgage. It is called in Hebrew Mashkanta Zahav, the golden mortgage, or uh, yeah, golden mortgage, as I write here. What is this? So it is not something where I feel very comfortable with, but let's assume you have a property without a mortgage and you don't have a pension fund. So you stop working and you don't have income. What should you do? Usually, you take your apartment, sell it, and you have money on the bank account and you can continue. That's not so nice. The banks offer a product that's called the reverse mortgage, where actually the bank or the bank puts a lien on the house and pays you each month mortgage like a rent, yeah, or like a pension payment until you pass away. And then the leftover money is the inheritance for your children, or the whole house will go to the property to the bank. I think it's a difficult product because you will, in the end of the day, you will lose your apartment when you pass away, and you have nothing to hand over to your children. But if you don't have any
I thought
money,
the difference goes to your children.
yeah, the difference is correct. Yeah. So the house will be sold, and the part that the bank is owing you is going to the
Yeah.
bank, and the other part is going to your children. It might be zero, it might be a lot. It depends, right? Therefore, also, if you want to sign on such a product, also your children have to co-sign on it, that they are aware of this. Yeah.
But what about if I want to take loan on as my mortgage-free home as collateral, and I want to invest, I want to use that money to invest in a property. How would that work? Could I do that?
You can do that. It's a relative of loan consolidation actually. You can take out money of your mortgage, but this is actually another loan that you take out. It is
Right.
not what we call in America refinancing, that we get equity out. Okay. Yes, you can do so. And the calculation is the 50% that I said. 50% of the property value can be for loans or mortgages. It's possible. Yeah. Now, let me talk just very briefly about routes and here about CPI linkage, and then we are done because we are also, the time is running out. So we have a lot of routes for our mortgage soup here. One is the prime route that is linked to the Bank of Israel interest rate. Then we have fixed routes. We have adjustable routes. And now I'm going back because you asked me to. Maslul Prime, uh, Kavur, and Mishtane. Okay? Kavur and Mishtane. Kavur is fixed route and Mishtane is a variable route. Variable means it is fixed for a period of time, and after that, the bank will change the interest rate, let's say. Now, fixed and the variable routes can be linked to the CPI or unlinked or not linked to the CPI. What does it mean, linked to the CPI? It is linked to the inflation, actually. And what is linked? And now it's getting really, really problematic. The principal is linked. Yeah. Let's assume you have 100,000 shekels in this route linked to the CPI. Once a month, Central Bureau of Statistics is adjusting the difference in the inflation. Yeah. Let's assume the inflation is going up by 1%. Then once a month, the 100,000 is getting bigger from 100,000 to 101,000. Next month, again, again, and again. Look at this here. This is the change in inflation over the last 25 years. And it's
Is being linked the linkage? Is that what I'm seeing as Ogen?
no, no.
No.
Organ is something different. Organ is the bank internal interest rate that is used for the mishtane, for the adjustable routes. Yeah. Look, it is on average always the inflation is in average always going up. Okay. So if you have a CPI linkage in your mortgage mix, then you start off with a very low interest rate, what sounds very, very interesting, and I want it. The bankers are not explaining to you that it is getting more expensive, even though that is a fixed route linked to the CPI. It will be more expensive. A fixed route over 20 years, 25 years, you sign the fixed route for 3.5%, but over the whole term, you will pay about 9%. Okay? So therefore, I strongly recommend to think twice if I want to take CPI linkage in my mortgage mix. Okay? Okay. So I've talked a lot. We are 5 minutes after the time. I think we should now talk about questions. And if the CPI linkage is interesting, I can show also comparisons. But let's open up for questions.
One question I just want to jump in with is when you think about taking out that mortgage, we know a third is fixed, and then the others are made up of the soup.
Hmm.
The most common ones, which I think you mentioned there, but just so it's clear for people, usually it's just tied to the prime rate. That's maybe like if there are two or three that are common ones that are in general viewed as the better options. Can you share kind of what I know
Yeah.
situation never what those sort of are?
Also, what my experience now is what people have and why they are suffering. So a third has to be fixed route, and then we have prime and the adjustable routes. Okay. The prime is adjusted, I think, 8 times a year. 8 times a year, the prime is adjusted. It is now already stable for a year. Before that, it went up every month. Yeah, every month the prime went up. So the mortgage of my customers became more expensive because the prime went up. Then I said, we have to stabilize the mortgage and to throw out the prime and to put more percentage into adjustable routes. Adjustable routes, you're fixing the interest rate for 2.5 or 5 years. It will not continue going up, but of course it will also not going down. But after 2.5 years, you can rearrange, refinance. but you stabilized your mortgage mix. The adjustable route is a bit cheaper, like 0.5% cheaper than the prime route. So also here it makes sense. Fixed and prime and or adjustable route.
This is getting a little bit into details, but the US Fed fund rate, which is, the rate that they're lending the US, often
Mhm.
guides what happens in Israel. It's not exactly the same, but it does have an impact in general. As we've seen in our program, the Fed raised the rates, they raised the rates. That's what caused the 2022 stock market crash. Now in
Mhm.
the US, they're starting to lower them. There's not any real talk of them going up. Also in Israel, they've been stable for a year. So I would think that we're seeing a lot of evidence that over time, it will take time, the prime rate has hit its high point, and unless we see inflation really shoot up, it's likely to come down.
Mhm.
Again, it changes over time, but that's also just to give the context of as inflation goes up and down, the prime rate goes up and down. It's not sort of things like linked to the CPI that just goes up over time in sort of one direction.
That's correct. And I'm reading a lot. Some people say prime will go down. Yes, for sure. But it will not go down to 2018 level, where it was like 2%. 2% was a very unhealthy interest time. Today we are closer to a healthy interest rate, but still too high. It will go down, but it will not drop down in a year by 1%. This is what I also believe, that it is not like this.
Questions, anyone, about any of the
I have a question.
Mhm.
So while we were talking, I actually, pulled up my mortgage details so that I could try
Mhm.
and follow along.
Mhm.
And as I'm looking at this, and I'm looking at my yitra,
Yeah,
and I'm looking at my schum mekori.
yeah,
So I understand my yitra is what I still have to pay off on each one of these, uh, mixes, right? And
yeah,
my schum mekori is what I took out at the day of the loan.
that's
Romy,
correct.
will you also say the English terms just for people that are not?
Sure. Well, I don't know what the English terms are. That's part of the thing. So I assume that
The
my
initial
yitra. Yeah,
the
please.
initial value when you took out the mortgage and the
Mhm.
present principal that you have to pay off. Nachon
Right.
lahayom. Correct for
Right.
today.
So this is what I'm looking at, and sort of based on what you've described, I've been trying to follow along. And what I really am seeing is that my fixed rate, I have the lowest yitra relative to my original fund, right? I've paid off the most off that.
Mhm.
But then when I look at the other two, which is prime and you can translate this maybe because I don't know what it is,
Mhm.
but ribit ogen agach, which I know is igrot chov, tzamud mishtane kol chamesh shanim. And when I look at this one, which is a variable one, which is variable every 5 years, I notice that my yitra of the three is the one that is significantly more than my original loan date.
Aha.
But as I was
It,
trying to follow along with you, it actually sounds like that should be lower than my prime rate, again, on a relative basis.
it was tzamut lemadat. It was linked to the CPI.
Okay, so that's what CPI would look like.
Yes. Look, I want
Okay.
to show you something, a comparison between linked and not linked to the CPI. Yeah, this is my program. It's a mortgage consultant simulator and program. This is a very intelligent thing, and it's a very strong tool. With this, I can simulate your mortgage. I can analyze your mortgage. I can upload your mortgage report, and I can show you graphs. How will the mortgage develop the next years? And I can also play with it. Now, let's look at constant routes, linked and not linked to the CPI. Yeah, let's have a look how the difference looks like here in graphs. It's the same amount. We have a break even after 5 years. The red one is the same amount linked to the CPI. We get a cheaper interest rate, therefore it starts off cheaper, but it will become extremely expensive over the whole term. Compared to the blue one, what is the real fixed rate, what is not linked to the CPI, what is stable over lifetime. Now, we already understand that it's cheap in the beginning, but it will become expensive later. I want to answer, Shlomi, your question. Now we see Yitrat Chov, how much how much does my debt develop over the years? The blue one is the constant route. I'm paying off my debt nice and fast. And the red one is linked to the CPI. And in the first 10 years, I'm almost not paying back anything of my principal. Okay? This is the second reason. It looks cheap in the beginning, 3.5% compared to 4.7, 4.8, but you're not paying back your mortgage. And it will become monthly so expensive over the long term. And even more crazy, it is at the Mishtane, at the adjustable route that is changing in this simulation every 5 years. Look at this. It starts cheaper. The break even is a little bit later, but we're getting into unpayable amounts what we have to pay for our mortgage. And also here we are not paying back the principal. And it makes it very expensive. Okay, I hope I could show you here why things that look cheap in the beginning in mortgages are better not to touch.
Joel,
So
how
that
do you say what's CPI in Ivrit?
It's the Madad. Sam
Madad.
le Madad. Samut le
Madad.
Madad is linked to the CPI, to the inflation.
Also, can I just ask you, how often do you recommend to refinance, and do you recommend going through a financial advisor or not financial advisor, like somebody to do it for you or to do it levad?
So I recommend just to refinance if it makes sense, but I recommend to review the mortgage every 5 years. Yeah, it makes sense to review. Most of the mortgage advisors charge money for it. I don't charge money for the review. So please let me have a look.
Joanne,
Thank you.
I wanted to ask you, I have like linked to CPI in my mortgage. And yes, I dived into my mortgage a few months ago and found out how expensive it was. And I was wondering, am I stuck with this Tamud Lamadad until the end?
No, you can
Ah,
refinance, but in some cases it makes sense to keep the Tsamut
mm-hmm.
route because it gets more expensive, but it's not getting too expensive. It depends. So I
Okay.
really have to have a look, but or everyone who knows about it should have a look. It might be that it makes sense already now to change it, but it might be also that it's not the time. Yeah, so I cannot say. I believe in
Yeah.
miracles very much, but I cannot do miracles by myself.
Okay. Thanks.
Is there a way to pay off the principal quicker? Like if you decided, okay, I'm going to pay extra in every month,
Very nice.
uh, is there a possibility for something like that, or are there penalties or?
hmm It's like I think your question is going into the direction the year has 12 months. Why can I not pay like 14 payments per year and to pay off my principal faster? What is common abroad is not known here. We cannot do this. We if we want to pay off the mortgage faster, then we have to pay more each month, usually.
Question on that, Joel.
Can you do that?
The prime, sorry, just to jump in. So, we have the different tracks. The fixed, we know there's a prepayment penalty, but the part that's tied to the prime, is there a prepayment penalty to pay off that portion?
So Prime is not having any penalties. The adjustable route mortgage route, yeah, has penalties, and the penalties are going down the closer you're coming to the change date, every 2.5 years or 5 years. Yeah, so there are penalties, but they are not so high like at the fixed routes, and they are going down the closer you're coming to the change date.
So you could theoretically pay a portion, Yitzhak, of just the prime part of your loan early without a prepayment penalty.
And sometimes even it makes sense to refinance everything and pay penalties, and it is still cheaper. Yeah, And then maybe because we have a lot of Hutznikim here, there's a route linked to the dollar. It's not one of the best routes, but it makes sense if you have foreign income. If you have dollar income, then you can choose this route because you're not having the change rate fluctuation there. Yeah, so it makes sense also to use it in this case. I would not use it if you don't have dollar income.
Okay. Any other questions from anyone?
I have another question. So when you pulled up your example software, it looked like you gave two different examples of variable tracks, and you compared them to the constant track, to the kavua. In both cases, it looked like the kavua was the better option. Do you have an example of a variable track that is better than the stable track, particularly because you said that you wouldn't do more than the bare minimum of the kavua?
My example just showed the difference between linked and not linked to the CPI in case of fixed route and in case of adjustable route. It was 100%. There was no other route included in this graph. Okay? So it was just to show this difference. Yeah, I think this is the answer because we
Yeah.
usually we have more than one route in our mix.
Okay. Yeah, that answers it. Thank you.
Mhm. Okay.
Just a really basic question. I'm a bit lost, but if
Yeah.
1/3 of your mortgage is a fixed rate that you're deciding to pay every
Yeah.
single month for sure, and then you have the other 2/3 is that a rate that you can choose from,
Mhm.
then why, if you want to pay more money later, why
Mhm.
is that a problem if you anyway have 2/3 that you can choose from?
Okay, no, you cannot. So I need to explain it better. So you pay every month one payment, one mortgage payment to the bank. This one payment includes actually the whole mortgage that you have. And the whole mortgage has a fixed route, has an adjustable route, has a prime route, has a linked route, an unlinked route, and so on, but you pay just one. In the moment that you're signing for the mortgage, you're fixing the condition until the end of the term. You're not choosing every month what you want to what kind of route you want to have. Even that we call it adjustable route, it does not mean that we adjust it. No, no. It means that every 2.5 or 5 years, the bank is adjusting the interest rate.
Oh, so the 2/3 of the mortgage is adjustable according to what interest rates are at the moment. Ah,
Um, yes, so um, you can have an adjustable route, but you can also have a prime route, right? You don't need to have adjustable routes there. But if you have an adjustable
what does
route,
prime route mean? Sorry.
mhm, prime route is a different route than an adjustable route that is linked not to the inflation, but to the Bank of Israel interest rate. Okay, it's just a completely different route. And here we have, it might be that once a month, 8 times a year, the interest rate might change. It did not change for a year now, but it might change again.
So I want to be respectful of your time, Joel, because I know we've already gone over and it's been amazing what you've shared. Just for everyone to understand, so, and I'm learning this along with all of you. You're saying, Joel, that you're open to reviewing anyone's mortgage and just giving them some consultation so they can see. And obviously, you want a new mortgage, or you want to refinance, or you want to take a loan. These are all things that Joel can either just give you some initial guidance on, or obviously help you through in the process. Um, and I guess just because we focused a lot on taking new loans, and obviously that relates to refinancing on things, are there any questions specifically against taking loans against your existing mortgage or the refinancing piece? I just want to make sure anyone that hasn't gotten enough information on those, they have questions, that we just address them, or maybe we're good. Okay. Joel, any last comments or just thoughts, things we should know, maybe we didn't know to ask?
So, in general, of course, we can talk the whole night. And as a German, I need a beer for that. But What I suggest is if there are still questions, and I'm sure there are, please feel free to turn to Malcolm, and Malcolm is doing the connection. And if you want me to have a look at your mortgage, with a big pleasure. Yeah, I'm uploading it to my system. We have to have a look together on the graphs, and we see how it will develop. And I will explain to you the mortgage. And then, in the end, if you believe that it makes sense to change it and to yeah improve it, then just then we start working on it. And if I say working, then it just starts that I put out my professional lunch bag. But also for questions. If there are questions, short questions, Malcolm has my contacts. Shoot me a WhatsApp, and I think it's good to continue talking about it.
Well, one final thought, just building on what Joel is saying. One of the reasons why this session I think is so important is we've gone, I think, with all of us through our pensions. And on pensions, we find that by default, a lot of us are in tracks that are not really the ones really meant for us. They're very conservative. They don't do that well. And by talking, a lot of you have connected with Ben or your own pension agent, by literally making one change, I've gotten so many messages from people like, I put my pension on the S&P track, and it is just the difference is night and day. So again, with this as such a big part of people's lives, or if you're thinking about it, just getting a second opinion can just help. And it's one of those things where the amount of time you spend on it versus the impact it can have is just dramatic. So
And I have also the simulator. And very often people come and say, I have 100,000 shekels on my cash. Yeah. Um, I want to pay off a part of my mortgage. So my answer is, the first answer is a question. The question is, can you pay your monthly payment, or do you need to reduce it? If you need to reduce it, then you have to throw the money into your mortgage and reduce the monthly repayment. If the monthly is okay, then don't pay off the mortgage. Go to Malcolm and learn how to invest it, because money that is working for you is better for you actually. Because if you throw it in an S&P 500, Malcolm knows it better, then maybe you get about 12%, yeah, compared to the interest rate that you pay for the mortgage, what is about 6%. Okay, so money is working better in an investment than in paying off the mortgage.
not going to argue with that. All right. Thank you so much, Joel. I learned a lot from the session, and guys, great questions and interest. And yeah.
Thank you so much.
Wonderful.
Thank you very much.
Thank you.
All right. Catch y'all later.
Thank you
Okay,
very much. Thank you.
big pleasure.